All right, let's do this. Hey guys, welcome to Pastors and Paychecks, brought to you today by your church admin. In case you don't know me, I'm Dave Anderson. I'm joined here today by Andrew Schneider, and one of our team members, Judah Smith, is also going to be on the call. So welcome, and we're so glad that you joined us today. In case you don't know it, your church admin is a ministry of the Illinois District Council of the Assemblies of God, and we're passionate about lightening the administrative load for pastors so you can focus more time on ministry. Our mission is to make ministry easier for you. Now, our team provides bookkeeping and payroll services for almost 90 churches all across the country. And we only do bookkeeping and payroll for churches and pastors, so we understand it. We love serving pastors also by creating content and resources to help you best steward your time and money. And that's why we're here today. Our goal today is to help you make the most out of your compensation. And by far the most common question we get is, how can I take advantage of the housing allowance? And to me, the housing allowance kind of feels like Bigfoot. It's this mysterious thing that we're not sure if it exists, and if it does, how we should interact with it. So I want to tell you about my first sighting of the housing allowance. It was my first day working in full-time ministry, and I was handed this piece of paper to fill out. You probably experienced the same thing. And you were told to fill it out to set up your housing allowance. Well, I'd never heard of a housing allowance. I wasn't sure how to figure it out. And I asked the person that gave it to me, and they said, I didn't know, what some tax thing. Do your best to guess what numbers to put on it. Well, I felt uncomfortable about doing so. So I talked to a pastor friend of mine, and he told me claim everything I possibly could, up to my entire payroll if possible. Well, I didn't want to get in trouble, so I contacted a church admin friend of mine, and she literally printed out an article off the internet that said that pastors should never use the housing allowance. Well, I got desperate for help, so I called a tax guy I knew that did taxes for business owners, and he said, I'm not really familiar with this housing allowance thing. Why don't you just put a bunch of numbers down and see how it works out at tax time? That didn't sound like a good idea. So I didn't want to get in trouble with the IRS. So I was very, very conservative with the numbers I put down. And honestly, I missed out on a perfectly legal way to maximize my income for years. Well, we don't want that for you. Today, we're going to break down the housing allowance in a way that we hope you will really understand it and make the most out of your compensation. We're also going to share some strategies, some other things you can do to bring home more money with each paycheck. So I hope you have a paper and pen ready to go and take some great notes. Now, we want to make the best use of your time. So we're not going to answer any questions that are specific to you and your tax situation or anything to do with your specific compensation. What you can do is in the chat, ask us to repeat things or maybe try to clarify something we said, but we don't want to get into specifics with you because we'll be on this call all day long. What we do encourage you to do is either email us or call us after this call, and we would love to help you maximize your compensation and answer those questions for you. So I hope you guys are ready. Let's do this. Andrew, can you help us understand some ways we can take more money home each month with our compensation?
I hope so. Dave, thanks for leading this and organizing this. Let me just say a couple things right off the top. Our heart is to resource churches and pastors. So after this call, if you reach out to us, we're not going to give you a sales pitch on why you need to employ us. We want to be able to answer questions and expand the kingdom by providing information and resources. So please don't hesitate to contact us. Okay, let's dive right in. It's important off the top to understand the difference between compensation and salary. We use these two terms interchangeably, but they don't mean the same thing. And so I just want to make sure we're on the same footing here. Compensation is the full exchange of value that an employee receives from an employer. Okay. Salary is the cash portion of that compensation. Okay. And we're going to talk today about how to optimize your compensation by moving things out of salary into different compensation buckets. Okay. So it's important for you to always be thinking not in terms of just salary, but in terms of compensation. So for a minister, compensation is going to include, of course, salary, but also housing allowance, as Dave talked about. But it also includes things like retirement contributions, insurance sometimes, and expense reimbursements. And we're going to dive into those buckets specifically on this call. One other important thing to make sure we're all on the same page with, this is one of those other like Bigfoot concepts. Ministers have what's called a dual tax status. Okay, in regards to Social Security and Medicare, ministers are self-employed. Okay, in regards to income taxes, ministers are usually considered employees. Here's why that matters. Social Security and Medicare is a tax that's typically shared between the employer and the employee. It's usually split in half. And the employee pays 7.65%, the employer pays 7.65% of wages. If you're self-employed, you're both the employee and the employer, and you owe both halves of Social Security and Medicare tax, which is 15.3%. That's the situation that ministers are in. If you're a credential holder in any capacity and serving in a ministry capacity, you're being paid self-employed, which means you pay the full 15.3% of Social Security. That's important because it's a huge tax burden for ministers. We're going to talk about how to optimize and reduce your Social Security Medicare tax. One other important note, you see these terms used interchangeably, and they really can be. Social Security and Medicare also is the same thing as FICA, and functionally is the same thing as SECA. SECA is technically the self-employment version of FICA, but they're the same thing. They all mean this 15.3% Social Security tax. One other just important thing that I think most ministers don't fully understand is you are, as a minister, exempt from federal tax withholding. You are not exempt from federal tax paying. So, of course, we know we all owe the taxes, but you don't have to have it withheld from your paychecks. If you're not having it withheld from your paychecks, then you're making quarterly payments. We always recommend setting up tax withholding from your paycheck. It just simplifies things. It reduces the chance that you're going to have penalties at the end of the year. But you're exempt from that. Okay. A concept that I think is so important that many, not ministers, many people don't understand. If you can understand this concept, you're like in the top 5% of people who understand tax status. Okay. Your effective tax rate is the percentage of taxes that you pay on your total income, inclusive of all your deductions and credits. If you have someone that does your taxes, or if you do them on TurboTax, a lot of times on the bottom of the front page of your tax summary, it'll tell you what your effective tax rate was. Your effective tax rate might be 10%. Okay. Well, your actual tax brackets are much higher than that. How are we only paying 10%? Well, it's because you have deductions and credits and things like that. Okay. The real important number for you is your marginal tax rate. And your marginal tax rate is the tax rate that you pay on the next dollar of salary that you bring home. Okay. So if your income goes up by $1,000 a year, what tax rate do you pay on that extra $1,000? That's your marginal tax rate. And that's what matters as we talk about moving money from one bucket to another. We're talking about your marginal tax rate, and that's how we're going to calculate what you're saving. Okay. So what's a realistic marginal tax rate? Well, if you're a minister, you're paying the 15.3% for FICA or SECA or Social Security Medicare. For federal income tax, you're paying probably either 12% or 22% as your income tax bracket. I've got the income limits there. Everything up to 47K or 94K, single or joint filer, is 12%. Everything above that is going to be at 22%. This is a great time to talk about tax brackets. I don't know that I've got time to break down the concept of tax brackets, but understand that if you cross that threshold over, let's say you're a married filer, you cross the threshold of $94,000 and now you make slightly over that threshold, only those additional dollars are taxed at 22%. Everything else below that threshold is still taxed at the 12%. You hear people say sometimes, well, I don't want to make any more because that's going to throw me into a new tax bracket. That moving into a new tax bracket doesn't affect any of the dollars below that threshold, but it does become your new marginal tax rate. And so as your tax, if you're in this 22% tax bracket, then your marginal tax rate, when you tack in, if many of us here on this call are in the state of Illinois, your state of Illinois tax is just shy of 5%. And so for example, if you're a minister in Illinois and you with a spouse are making over $94,000 filing jointly, then your marginal tax rate is 42.25%. And that's disgusting. And so we want to talk about how to save money. Okay. So here are 4 buckets of compensation at the top of this slide here: salary, housing, reimbursements, and 403B contributions. Okay. And you'll see here that salary is subject to all of these taxes below: Fed income tax, state income tax, Social Security, Medicare. Plus, we don't have these really often in the state of Illinois, but many other states you'll have either school district taxes or municipal taxes. Okay. So salary is subject to all of these taxes. Housing, you'll see, ministers are aware of this. Housing is not subject to any income taxes. It is subject only to the Social Security Medicare tax, FICA, SICA. Reimbursements and employer contributions to 403Bs are subject to no taxes. So that's really the crux of our talk today is, are there ways that we can move money from one of these taxable buckets into a non-taxable bucket? Okay, that's what we're going to talk about. First, on the housing allowance. If you're a veteran in ministry, you probably understand this. But every dollar that you're able to claim as housing allowance as opposed to salary is going to save you on all of your income taxes. So again, thinking back to marginal tax rate, you're talking your state plus your federal. So 12 to 22% plus whatever you're paying on state. So maximize your housing allowance. Going back to Dave's example, find a way to maximize your housing allowance. Allowable expenses include, of course, mortgage or rent, insurance, property tax, utilities, including internet, lawn care, whether you pay somebody to do your lawn care, you do your own lawn care, you buy a new lawn mower. It's that time of year. You should be putting fertilizer down for the spring feed. That is an allowable housing expense. Furniture or decor, you buy a new couch, that's allowable. Any improvements to your home are allowable housing expenses. So if you're going to remodel the bathroom, make sure that you're planning your compensation for the year with that home remodel in mind, because it is an allowable expense for housing allowance. A common question that we get on housing is, well, typically churches will designate this amount at the beginning of the year for the whole year. And so I think sometimes people assume that then that number can't change. It's locked in for the year. And that is not true. Working with your board, you can change your housing allowance at any time throughout the year. So if you come upon a major housing expense, or you plan to do one mid-year, late in the year, talk with your board and reallocate it. Make sure that you have enough housing allowance that is to cover all of your allowable housing expenses. So you can change that. One thing that you can't do is you can't go back in time and reallocate money that was paid you as salary as housing. Okay. So you can't go backwards, but anything forwards, you can reallocate.
Hey, Andrew, I have a comment here. A couple years ago, my wife and I had the pleasure of going through an IRS audit. And she's self-employed. It was triggered by her income, not my ministerial income. But one thing I learned from that is to save receipts. And so every time I go to the hardware store and I buy an outlet or I buy oil for the lawnmower, we just bought a couch. We save receipts for everything. Even, if I go buy screws to hang a picture, I save that receipt. Is that a good idea to do that?
Yeah. And it never seems like it's important until you're talking with an IRS agent. And so, yes, like saving those receipts it's not just a good idea because like you should do it in case you get audited. it's required by the law. So save your receipts. Um, one other point on housing allowance, you can't, if you did a home remodel in the past, you can't go backwards and pay for those things out of housing. Okay. So once the tax period has already closed, then the expenses can only be applied to that tax period. But this is why I've seen ministers that were going to do a home remodel. They'll pay for a portion of the supplies in December of one year, and then the remainder in January of the next year, split it across 2 tax years, and that way they can maximize what they're able to do with those housing dollars. So one thing also to note here is that like the line of who's a minister and who's able to receive a housing allowance. So the IRS code says that ministers must have, this is a word to write down, sacerdotal privileges in order to receive a housing allowance. So you have to have the authority to perform a wedding or perform a funeral. And this must be afforded to you by some credentialing body. I would say this is, again, if you're a veteran minister on this call, you probably had the housing allowance for many years. But one thing I find is that this isn't often explained well to people who are maybe serving in a ministerial capacity in your church, but maybe don't hold credentials. So maybe this is a worship leader or a part-time kids director, people who are serving in a ministerial capacity, and you're paying them maybe a part-time stipend. This would be a great pathway to get them sort of on ministry track, would be seek out a pathway for credentials for them, so that instead of just paying them a taxable stipend, you could pay them a housing allowance that's now tax-free. So if you have folks on your staff that fit that type, consider finding a way for them to receive credential, and then they can begin receiving this housing allowance. And that, I think, is a huge benefit for somebody that's serving part-time. All right, let's move forward. Oh, I want to talk about some more creative compensation structures. Okay, expense reimbursements. Why are we talking about expense reimbursement as compensation? Well, I think most people understand expense reimbursement as these are expenses that you would incur in the course of doing your job, and typically, most often, these are already reimbursed by the employer. So things like mileage, meals, gifts given to folks in your congregation. A lot of times these are already being reimbursed, but maybe some aren't. Books and resources for you. Those are allowable business expenses that can be reimbursed. Here's a big one that's not often taken advantage of is tithe or dues that are owed to a credentialing body. That's an allowable business expense for you, and it can be reimbursed by your employer. Now, why is this important? Well, if you have expenses that you're currently incurring that could be reimbursed, you'd be much better off. So let's say, for instance, you pay for Logos software. And I'm not a minister, but I'm told that can be very expensive. And so let's say that's $500 a year, and you're paying that out of pocket. Okay, you'd be much better off in lieu of receiving $500 of salary with which then you pay for that software. You're generally better off to just have the employer pay for that software for you and reduce your salary income. Okay, so doing so will save you significantly on taxes. Now, books and resources are one thing. A significant expense here would be the tithe that would be paid to a credentialing body. So let's talk about that. If maybe you're an independent church and you pay tithe to your local church, it's almost never a business expense. the IRS is pretty clear on this. Tithe paid to a local congregation is not a business expense. However, tithe paid to a credentialing body may possibly be a business expense. Is that amount, is that tithe or that due required? If it is required by your credentialing body, then it absolutely is a business expense. Okay, why does this matter? The 2017 tax law changes reduced the tax benefit of claiming unreimbursed business expenses on your taxes. So for instance, if you incurred business expense like dues to a credentialing body and it wasn't reimbursed by your employer, you could write that off on your taxes and it was functionally the same thing. However, the tax law changes in 2017 significantly limited the amount of unreimbursed business expense that you can claim. Okay. So now for many people, the tithe or the dues that they're paying to their credentialing body far exceed that cap. And so you're missing out on a significant tax benefit by paying those out of pocket. So the best pathway is to have those expenses reimbursed directly by your employer or have them paid directly on your behalf. Okay. So here's how that looks. If you owe typically to your credentialing body dues or tithe in the amount of $4,000 a year, you could, instead of receiving $4,000 of salary, paying that $4,000 of tithe and writing off a portion of that on your taxes, you're better off having your compensation package restructured so that your salary is maybe reduced slightly. And in lieu of that, the church pays your tithe on your behalf. And in that way, the amount of tithe that you paid is now totally exempted from your income. So you're not paying Social Security, Medicare tax on it. You're not paying any income tax on it. A couple key considerations to protect yourself if you do something like this. The IRS does not like it if you work with your employer to reduce your salary. They don't like that. But if this is directed from the board, then you're protected in that. Okay. And so maybe you want to send your board member the recording of this call and point them to a specific timestamp where we discuss this specific thing. Or you can have them speak with us and we'd be happy to help them structure a policy on which the board says, you know what, starting at this date going forward, the church is going to be paying on behalf of the minister their tithes or due owed to their credentialing body. And in that way, it protects you from a salary reduction type issue with the IRS. All right. A couple other expense reimbursement opportunities. Travel reimbursement. Again, most churches are already reimbursing like mileage, that a pastor incurs, go to a hospital visit, things like that. Okay. But consider, are there conferences or annual gatherings that you would benefit going to? Can these be combined with personal travel? They can. They absolutely can. So I've seen this used pretty effectively where so we're part of the Assemblies of God, and the Assemblies of God every other year has what's called our General Council, where it's a gathering of all Assemblies of God ministers from across the nation. And usually they have it somewhere nice and warm, like a good vacation spot. And I've seen a lot of ministers who will, they'll go to this gathering and then they'll also extend it by 3 days and do family vacation. And is that family vacation portion of the trip reimbursable tax-free? No. But the travel to and from the conference is reimbursable tax-free. All the meals that you have, your hotel or Airbnb stay while you're there, all of that is reimbursable tax-free by your employer. And so again, does the church, okay, so you're going to negotiate with the church just to have them out of their pocket cover the cost of this thing? Well, maybe, but maybe you just say, hey, for our compensation structure for next year, I want to go to this conference and the allowance for that's going to be something like $2,000. Can we move my salary down and increase my travel allowance by $2,000? And now I'm getting that tax-free instead of taking it as salary and paying it out of pocket. Okay. So again, that's not going to cover all. There's plenty of details on what's reimbursable, what's not on these travel things. The best thing that we can do here is for you to take some notes and think, I need to follow up on that. I need to follow up on that. And then let's follow up later. We won't hit all the details on a 45-minute call. The book that I have on this is like 600 pages. So we won't cover all those details, but if it'll cue you to write a list of things that we should clarify forward, then you can contact us and we can walk you through the specifics of what you need to do to take advantage of these. Okay. Last one on reimbursements, education. So not every minister is going to continue forward on their education, but for those that are considering it or currently enrolled, this is a huge opportunity to, again, move money from a salary bucket to a non-taxable bucket. Now, I think, again, many churches have some sort of policy on this where they might help provide assistance with education. There are two pathways through which a church could reimburse or cover the cost of education for an employee. One is there's just an allowance in the tax law that if you have you can put together just a written plan or policy at the church level that says we offer education reimbursement up to this amount for these types of employees, and there's a cap of $5,250 per year that you can pay to an employee for tax-free. That's tax-free. And there are some caveats as to what types of expenses qualify there, but that's one pathway. $5,200 right off the top with a written plan that's put in place at the board level. Another pathway, if the education that you're receiving is education that empowers you in your current job and is not just training for a different job, then that's a business expense for you, and that can be reimbursed by the employee just like any other business expense would. Okay, so the benefit of that is there's no cap and there's no real restrictions. You don't have to have a written plan in place, anything like that, as long as it meets the requirements of this is education that isn't specifically training you for a new job, but rather is just relevant training in your current position. Then that can be fully reimbursed. So again, if you're considering a graduate level program that maybe the tuition is $5,000 a year, okay, and maybe the board's willing to help cover that cost to the tune of maybe they say we'll do 50-50, okay, and so the board's gonna just give you or reimburse to you $2,500 to cover your education. Well, what about the other $2,500? Well, you're paying that out of pocket. Okay. Rather than pay it out of pocket, you'd be better off working with the board to cover the entire $5,000 and restructure your compensation so that your salary bucket is reduced by $2,500 and they're covering the entire $5,000 because they can cover the entire $5,000 tax-free. And now you've moved $2,500 out of a salary bucket into a non-taxable bucket. And again, when we're making moves like that, whether it's with tithe, with education reimbursement, or with travel, what's that really saving us? Well, it's saving you your marginal tax rate. Okay. So what's your marginal tax rate? It's at least 30%, possibly up to 40%. Okay. Those are the dollars that you're saving by doing that. And again, I just want to make clear that anything that would involve you so a lot of these are best done at year end for next year. But anything that would be done in the current year that would involve a reduction of your salary, you want that to be board directed. You don't want that to come from you or you're creating an agreement with the board that we're going to do this. You want it to be board directed. So that's a fine line for sure. But again, if you want to point a board member back to us and we can talk about how to structure that so that they can take it to you, we're happy to facilitate that. Okay. Last bucket of compensations here are retirement contributions. There are several strategies to minimize tax on retirement contributions. Okay. Retired ministers are able to continue to receive tax-free housing allowance in retirement as long as those distributions are from a bona fide denominational retirement plan. Okay. So I'll give you the Assemblies of God example here is that we have AG Financial Services or Church Extension Plan. Those are two providers of 403Bs for ministers. Those are qualified, bona fide denominational retirement plans. And what that means is if you have money in those retirement plans and then you retire, the distributions that you take from that can continue to be received as tax-free housing allowance. Well, that's cool because housing allowance is not subject to income tax, whereas distributions from a traditional 403B would be subject to income tax. Okay. So it's totally tax-free money, your retirement housing allowance, if it's taken from a denominational retirement plan. Okay. Most of us understand this, but the difference between a traditional and a Roth investment. A traditional account, you pay the taxes later. It's a tax deferred account. So when you put the money in, you get a tax break. But then when you take the money out, you pay taxes. Roth is the reverse. Roth, you put in after tax money, but then it grows and is distributed back to you totally tax-free. This is important for ministers to understand. Don't use a Roth until you've funded your retirement housing allowance, okay? Because the housing allowance coming out of a traditional 403B is already tax-free. So you don't want to use Roth money to fund your retirement housing because Roth would be tax-free either way. So what you want to do is you want to contribute enough to your traditional 403B. You get the tax break now by doing traditional. So you get a tax break when the money goes in, and then when the money comes back out, it's tax-free again because it's housing allowance. Okay. So you want to set up your retirement nest egg, and you can do it. This is just a math problem. It's just calculating what do I think my housing allowance expenses might be in retirement. That's the target you want to shoot at first. So get an idea of what your housing allowance expenses might be in retirement, and that's what you want to shoot for in your traditional retirement account through a denominational plan. Once you hit that target, now you want to start funding Roth strategies because then in your retirement, you want to be taking that money out tax-free. So again, don't use Roth until you have funded your housing allowance in retirement, then shift to Roth. This is different advice than what most people would get. Non-ministers, most people say always go Roth first, but for ministers, you've got this unique thing where you can get the tax benefit now and later on the housing portion of that. Okay. So this is also important for people either that have come into the ministry as a second career, or maybe who are serving bivocationally, or who have maybe a working spouse that gets retirement benefits at their job. But again, put all of your retirement dollars together in one plan, okay? And the best bang for your buck that you can get is anywhere where you get a match. So if your spouse works and gets a match, then make sure that you're funding that plan up until the employer match. The second best bang for your buck that you can get is a traditional 403B where you're funding housing allowance because you get tax break now, tax break later. Okay. So first bucket that you fill as a family is anything up to a match. From there, fund traditional 403B to fund your housing allowance. And then after that, your Roth accounts. Okay. So if you have somebody serving bivocationally, again, in the Assemblies of God, as long as you're a credential holder, it doesn't matter if you're part-time, you can contribute to the 403B plans. So, strongly encourage any folks on your staff who maybe are serving just part-time, you consider building that into their compensation structure because they can take advantage of that housing allowance tax break. It's significant. One point, rollovers. I've gotten this question before. Okay, if I'm coming to the ministry later in life, can I roll in a previous employer's 403B into the AG Financial 403B and use that money as tax-free housing allowance. And no, you can't. So great idea. Would love it, but you can't do that. And then lastly on retirement, and we're coming right up to the end here. Last thing on retirement, employer contributions are entirely tax-free. Okay. So if you elect what's called an elective deferral, if you decide that you want to contribute to the retirement plan, then you get a tax break. Your income tax is reduced by contributing to that 403B plan, but you still pay Social Security, Medicare on that income. Okay, so it doesn't reduce your self-employment tax basis, just your income tax basis. Okay. But employer contributions are entirely tax-free. So again, you can't do a salary reduction thing on this because then it's an elective deferral. But you may be wise to work with your board and consider making a part of your total compensation package an employer contribution to retirement. Okay. The benefit of doing that is that it's totally tax-free. The downside is that you no longer have control over it. So you can't, if you need the cash, you can't go back to the board and say, hey, can we change that for these next 3 months? Again, the point at which it's an employer contribution, you no longer have control over it. However, doing so makes it tax-free. And so, again, could be a significant benefit to you by using that strategy to have the employer contribute and thereby saving the self-employment taxes on that. Okay. Last slide and then we're done. I just wanted to put together a quick case study of, okay, what does this look like in a spreadsheet? So 2 scenarios here of compensation. This is a $60,000 ministerial compensation package. Traditionally, what I see is something like this on the left. You got $60,000 and that's split into $20,000 of housing, $40,000 of salary. And then maybe out of that salary, the employee is doing some retirement contributions. Okay. We would recommend something more that's on the right, which would be maybe doing an employer contribution into 403B, which would be tax-free. Paying the minister's tithe on their behalf, because they're already paying that anyway, but now instead of it being out of their pocket, it's coming directly from the church. And maybe a travel allowance or something like that, where they can maybe get some tax-free on some travel to a conference or something like that. And doing it this way, now you've reduced your salary to $27,500 instead of $40,000. And this is assuming that you as a minister were incurring these expenses anyway. Okay. You were already paying your tithe. You were already traveling to the conference. You were already contributing to your 403B. But now you're just doing these directly from the employer in a tax-free way. In making this type of a restructure, you're saving something in the neighborhood of $4,000 in taxes. You're saving significantly on self-employment. And then also this is figured on Illinois state tax of 4.95%, and then a federal tax bracket of 22%. So that could be the impact of shifting some of those buckets around. So as I finish up here, this is our contact information to connect with us. I've got Dave's email there, my email, our phone number, our website. Our heart is to serve pastors, but I am not a tax attorney, and this was not tax advice. So I want to give that disclaimer that you are not my tax clients and that this is informational only. And we're happy to help and provide resource and point you to resources. And you feel free to call us and reach out to us, if you want to have a board member, reach out and we can talk through how they can structure your package so that way it keeps you out of it. We're happy to facilitate that. We want to make sure that you understand that we are not tax attorneys, and this is not official tax advice. Dave, Any other thoughts or closing comments?
Yeah, I want to thank everybody for spending this time with us today. I hope this has been a blessing. I hope every one of you have some sort of takeaway today that is going to help you maximize your compensation. Now, we want to share this opportunity with other pastors in other districts. So I need you to do something for me. I need some honest feedback on how we can improve this workshop. And we also would love to better understand what you need help with. What is it, if we could create some more content or other workshops, what would be most helpful to you? So you're going to receive an email after this workshop today, and it has a very short survey in it. Please fill that out for us. Help us help you. We'll also include a link with all of today's slides. We'll give you a link to the recording of the call and also some other helpful resources. I want to make sure that you have our contact information as well. There were some questions that popped up in the chat that we just didn't have time to answer specifically today. That email will include how to get in contact with us. We want to help you, so don't hesitate to reach out. And finally, I want to give you some homework. First of all, find ways to maximize your compensation. And secondly, fill out that survey. It's very important to us. So once again, thank you for your time, and I hope this has been a blessing to you.
Take care, y'all. It's good to see you. Thanks for joining us.